Oh, hi everyone. This is Larry, your co-op teacher again. So for today's lesson, we are going to learn all about the Canadian government. So basically, there are three levels of government in Canada. There is the federal government, and the capital of the federal government is in the city of Ottawa. A provincial government, and there are 10 provinces in Canada, and the capital of our province, which is Ontario, is in Toronto. And then there are many municipal or city slash town governments. And our municipality, of course, is the city of Toronto. And each level of these governments is responsible for different things based on the Constitution that was originally signed in 1867. It sort of set up the division of responsibilities for each level of government. So let's look at some of the responsibilities. So we'll start with the federal government, which is for all of Canada. So basically, these are the primary responsibilities of the federal government. So they're responsible for staffing, training, and funding the military. They set immigration policies. They run the diplomatic embassies around the world. They also fund and manage the Canada Pension Plan, old age security, and guaranteed income supplement. So these are all three retirement income or retirement money for senior citizens. And that's money that's given to them by the federal government once they retire, typically at age 65 and later. The federal government's also responsible for all railways, airports, TV and radio stations, foreign affairs, I already mentioned, the embassies and the diplomats. And they collect many of the taxes and then they redistribute that money back to the other levels of government. The next second level is the provincial government. And the provincial government is responsible for lots of important things. And you notice here on the chart. So healthcare, so that's your doctors, your hospitals, your nurses, education, and that's all the way from kindergarten all the way to university. They're also responsible for forests, mining, oil extraction or exploration. So if you have let's say a gold mine in Ontario or a oil well in Alberta, the rules governing how those mines work are set by the provincial government. Also responsible for the highways. If you hear in Toronto, we have the Highway 401, Highway 404, Highway 407. The 400 series is the responsibility of the provincial government, and they create the roads, they manage the roads, and they paid for the roads. And finally, we have the provincial courts and the land transfer. Anything to do with real estate, so property rights, land transfer is all managed by the provincial government. And finally, the municipal government. This is the more local government. So municipal governments are responsible for roads, sewers, water, public transportation, so in our case the TTC, garbage collection, community centers, libraries, police, fire, paramedics, and zoning rules. So they're the ones that tell people that you can't have a business here, this is a residential neighborhood, those sort of things. So lots of local issues that affect our day-to-day lives. So all three levels of government spend a lot of money on many different things, but they don't actually make any. They don't make anything, so they get their money from somewhere else, and that is from us in the form primarily of taxes. So the big tax that we all pay is called the HST or Harmonized Sales Tax. In Ontario, it's 13%. It's a mix of the GST, which is 5%, which is the federal sales tax, and then 8% provincial sales tax. 5 plus 8 is 13. Every province can have a different HST rate. It's higher in Quebec and the Maritimes, and it's lower in like Alberta has no provincial tax, so they just have a 5% sales tax, for example. So that's the big one of the big ways the government makes money to pay for all those services that we use. There's also income tax. So every year, if you work, you actually every year, every paycheck that you when you work, money's taken off your paycheck in the form of income tax. And then once a year, you do an income tax return to see whether you've paid enough money or you've paid too much money. That's typically due at the end of April, the income tax return. And then at that point, you may get some money back or you may owe the government some more, depending on whether you paid enough income tax throughout the year. Then you have excise taxes. So taxes on things like alcohol, cigarettes, gasoline. Those are the big ones. Those are called excise taxes. And then finally, corporate taxes. So taxes that we like the corporations pay, like corporations like Bell Canada, Petro Canada, all the main companies and smaller companies in Canada. Then we have employment insurance premiums. If you work, you pay EI premiums. It comes off your paycheck every week or every 2 weeks. This money goes into a fund to pay for workers who lose their job, to give them some financial support while they look for a new job. But we all pay for this in our paychecks, and then some of us need it and some of us don't need it. Then we have property taxes. Those are typically levied by the municipal governments. So you pay property taxes to the City of Toronto if you own a house or a condo. And even if you're renting an apartment, the owner of the apartment will pay the property tax and then sort of put it into your rent. So we all, in a sense, pay property tax. And then finally, there's a separate health tax in the province of Ontario. So it's an extra, few $100s that people pay. It's a separate tax, and the money is supposed to go to help funding our healthcare system. So on average, a typical Canadian will spend 38% of their income on taxes. So a typical Canadian makes about $40,000 a year. That's their salary before tax. That's like what we call their gross pay. So 38% of that will go to pay for all the taxes that you see above. So not quite half, but a significant amount of money. This is a little bit higher than what Americans pay in taxes, but it's lower than what Europeans pay in taxes. So we're sort of right in the middle between the Americans and the Europeans. And that's because we as a society, as Canadians, decided that this is the level that we want to spend in taxes in order to get the services that we want to get. If we didn't want to spend this much money, we could elect governments that made cuts and had less health care, less education, smaller military, etc., and then we'd pay less taxes. That's typically what the Americans think. The Americans are more about individual rights and less of the collective. We put money in together to support people who are less fortunate or need more help. And the Europeans are even more in favor of contributing more money to pay for people who maybe need some more help. So it's just a different philosophy that people around the world have. We have something in Canada called a progressive tax system. So basically, the more money you make, the more you pay in taxes. And this money goes to support services for yourself, but also for other people who don't make a lot of money. And we still want them to have good quality healthcare and education. So the richer you are, the more of your taxes will go towards supporting people who are not as well off. That's called a progressive tax system. So now the government agency responsible for collecting and managing taxes is called the Canada Revenue Agency, or CRA for short. This is a federal government agency, so it's managed and it's a responsibility of the federal government in Ottawa. And their duties are to collect taxes from people and companies. They're also there to make sure that all Canadians are complying with the rules when it comes to taxes, so no one's breaking the rules. And if they are breaking the rules, they're supposed to catch them and then charge them with a crime or charge them penalties. They also are negotiating tax treaties with other countries. So, for example, if you have investments in America and you pay tax in America because of those investments, you won't be paying tax on in Canada on that same amount, that same money. So there's a tax treaty between America and Canada saying people only have to pay tax once where they made the money. They don't have to pay it twice. And finally, the CRA also provides tax advice and tax services offices to Canadians. So if you have any questions about your income tax return, or if you have a business and you're not sure about how to collect taxes from your customers, you can contact the CRA and they have people who can help you answer your questions. So that's the CRA. So, how much does this stuff all cost? Well, for example, education, we spend roughly $11,500 per year to send one child to elementary or high school. So if you have two children and they're both in school, it's costing the provincial government, because the province is responsible for education, $23,000 to send those two kids to school, and that's from grade K to 12. So we're talking here 14 years now, because kindergarten is a 2-year program. So it's expensive, but it's a lot cheaper than private schools. And if you had to pay this money yourself, many of you wouldn't be able to afford it. So it's a good thing that we all put our money in together to fund education. People who don't have children still pay for education. People whose children grew up and have gone off and have jobs and everything, but so they don't have kids in the school system anymore, they still pay education taxes as well. Everyone pays, whether or not you use the system. We believe that if we educate our young people collectively, all the young people of Ontario, it'll make us a richer province in the long run. University. Education costs $14,000 per year to send a student to college, university in Ontario. So it's $14,000. That's the part that the government pays, not the part that you pay. Typically, tuition is about $5,000 or $6,000 for college, and $8,000 for university. That's the part that you pay if you are going or your children are going to university or college. There's another $14,000 that the province pays to the university. And a new program that just started recently in Ontario, if you have a family income of less than $50,000 per year, so that's the whole family, like the husband and wife, if both are working or just if one person's working, the total family income has to be less than $50,000. Then the government pays the tuition, which is at $5,000 to $8,000 that you're responsible for. So for many people, education is free. Not books, not any other supplies, but the actual tuition is free, which could be valuable as $22,000, which is the $14,000 that the government already pays. Plus, you won't have to pay the $8,000 if your child goes to university. So that's quite expensive, but like the education I mentioned above, we collectively believe that it's good for our young people to go to university. So we want to find a way to encourage them to go to university or college, even if they can't afford it. And this is one new program that it's starting in September 2017, I believe. Now, just going back to my last point about why we believe that we should subsidize people to go to university or college even if they can't afford it. If you look at the unemployment rates based on education level, you see that the people with less education, in this case it says less than high school, have much higher unemployment rates than people who graduate from high school. And it's even better if you go to college or a trade school, and it's slightly better if you go to university. So by going to university or college, our young people become better educated, more useful to employers, and they end up getting jobs. And when they work, They're no longer draining money from the system. We don't have to support them anymore, but they are making money, paying taxes, buying cars and groceries and houses, and that then provides jobs for the car dealerships, for the grocery store clerks, for the real estate agents and the furniture salespeople. So it's a cycle of goodness. So that's why the government wants us to go to education, educate ourselves. So high school, less than high school is a very high unemployment rate, as you can see there in the chart. 16% unemployment rate for people between the ages of 25 and 29 who have not graduated from high school. Okay, salaries. This is sort of talking about why you should talk to your kids about going to school. So this is average salaries, and this is American dollars. I couldn't find any Canadian dollars, and it's from 2012. So what you see is, for example, high school graduates. So the average high school graduate in America makes $41,000 per year. And then you see, for example, if you go to a career school, for example, maybe a training program like a plumber, electrician, bricklayer, their average salary is $49,000 a year. And then people that have a bachelor's degree, so they have graduated from a 4-year university degree, have an average salary of $71,000 a year. So it shows that the better educated you are, the more money you are more likely to make. Going back to how much stuff costs. So healthcare. The government spends $6,000 per year per person on healthcare in Ontario. So for a family of 4, that's about $24,000. Now, for some people it's less, some people it's more. The older you are, obviously you use up more healthcare, but this is the average. So imagine if you had to come up with 24, let's say you had a husband and wife and 2 kids, and you'd have to pay for your own health care. You'd have to come up with $24,000 a year on average to cover your health care. Very expensive, and many people would not be able to afford that. So how do we pay our taxes? Well, for most people, it's all automatic. It's automatic tax deductions that come off their paycheck from their employer every week or every 2 weeks. And that's it. So we really don't do much beyond that. When you go to the store and you buy anything, pretty much, the store will charge you HST, and you'll pay taxes that way. If you go to buy alcohol or gasoline, typically the excise taxes are inside the price already. And that's primarily how we pay taxes. And then once a year, we file an income tax and benefit return with the CRA. I mentioned this already. And this is where you find out whether you paid enough taxes based on your income. So if you work for a company, typically they know pretty accurately how much taxes you're going to have to pay. So what you usually find is that come April 30th, your income tax that you paid is very close to what the government says you own. Could be a difference of a couple $100, positive or negative. So very little difference. It's more a matter for people who are self-employed or work different jobs or have children in daycare where they can deduct daycare expenses or university tuition, that they may end up getting a big tax refund, which CRA doesn't know about, and that's why they get the big tax. You hear about the big tax refunds that usually come out in May that people go out and spend on stuff. So that happens every year, and pretty much everyone who has any sort of income files a tax and benefit return. Okay, so this is a picture of a pay slip or pay stub. Just want to go over it with you quickly because your assignment is going to be something similar to this, where I give you some information. I want you to create the pay stub. So this is the pay slip for an employee at the Board of Education for the City of North York. So just quickly go through this. So what we see here is a current earnings of $2,515.60. So this is the earnings before any deductions. So 2515 is 60 is what we call the gross earnings or current earnings. Then we deduct the deductions, in this case a total of $795.98, to get the net pay of $1,719.62. So this is the amount that the actual employee gets to keep after paying off the deductions. So the deductions are listed here. So what you see, the first one is CPP, and that's $65 and change. Then we have employment insurance, $72, income tax, $422, and in this case, because it's a teacher, they contribute to their retirement pension plan, so that money is deducted, $183 automatically off their paycheck. And then when they retire, they'll start getting this money back from the pension plan. So it's not a tax, it's more of a withdrawal for the future. And then we have union dues. So in this case, federation fees, $29 and change. And then they also pay a little bit for their benefits. So they pay dental benefits, very little, 31 cents. Long-term disability insurance. So this is in case someone gets injured on the job. It's insurance. So the insurance company will pay them their pay while they recover from their injury. And that's $14.84 insurance. So that's, you add up all of these numbers here and you'll get to $795.98. So that's what a pay slip looks like. And many of you who've worked, you'll see this and you'll know these terms. Okay, so now this is your homework for this week. I've attached this to the email. So if you go back to the email, you'll see this document. So open it up, and what you need to do is fill out all the missing boxes using the information below, number 1 and number 2. So I give you the name of the person, how much money they make, how many hours they worked, what the deductions are. Now I don't give you the amounts, I give you the percentages. So you have to figure out what the amounts are. So for example, just to make sure we remember how to do this, let's look at CPP, and it's 5% of gross pay. So if your gross pay is $100, the calculation would be 100 times 5%, or 0.05, which would give you $5. So that's how we do the formula for percentages. So this is your homework. Fill this out, and then you can email it back to me, or you can print it out and bring it to me on the Monday, or give it to me when I come to visit you at your placements. Thanks very much. Have a good week. If you have any questions, call me, email me, and we'll talk to you soon. Okay, bye-bye.